Hey guys, Friday, March 22nd of 2024. Let's check out nat gas without any further delay. As you can see, the midpoint has changed. It's now 171, and you can see that it used to be 176, 177. Now it has adjusted within 3 months. You can see volume has been dwindling down. Not that much volume picking in, so I don't know what's cooking. Looks like somebody built a position here, pushed up. It pulled back, and now it's just been going sideways since March the 13th. Nothing happening. No upside, but no downside. So it's just sideways. This is the market I hate being in because I don't want to be caught in this sideways price action because it's like unpredictable. It's not trending. It's just sideways. And then you think it's a breakout. It's a fake out. And then when you think it's going to break down. So in reality, this is probably a good scalping range if you're quick or using algos. You buy in here, you get out here, you sell from here, and you get out here until it changes where it continues going down or breaks out, and then you have to ride that wave or whatever trend it's going to go direction. Looking at our simple glance chart, the only thing positive on the weekly is the MACD. And on the daily, nothing's positive. And we about to close below 168, which is the mobile bands, this red cloud. Meaning that it's more probable to go more to the downside to test 164. So we got a pivot here. We got a pivot here. So this is the range. And if this doesn't hold, chances are it might test 152. But if this holds, it's going to bounce. We just probably need one of these lines over here because now it's a little more fractal on what's going on until it breaks. But if it breaks, we're going here. And if we break above here, we're going to go test $2. And I was betting on the $2 one, but we're below the 20. We're about to close a daily close below 168. That's not looking good. MACD is still negative now. Looking at our 4 hour, I brought it down to one Andrew's pitchfork because it doesn't make sense. We're not even above here. So the path of least resistance, unfortunately, is to the downside unless this holds. But yeah, it's going to be more pressure to the downside. The bears are sniffing weakness and they're smelling it. What's here is that you got the midpoint at 50%, which is 165. You're below the 1x4 angle right here on the Gann grid from the first impulse wave. And you can see that this was a key level, and from here we fell. And if you put trend lines, you can see that they kept breaking out, but then failing and going sideways. You could put all these trend lines on all these different pivots on the 4 hour, and you could tell that there was breakouts and then sideways to lower. And so far, we have the last pivot here. See that it failed there, but I bet you in the future, if it goes like this, we'll get all excited. It'll go sideways and then push it even lower. So the trend line strategy is not that great, but it kind of at least gets you a line to see where the bulls and the bears are going to go if they break it. It depends on the continuation. Let's look at our midpoint chart. You can see that 176 has been a strong resistance level. Now we're below the 125. So if the bears are going to push lower and we take out this level right here around 165, you got 160. And in the square of 9, that's 163, which is a 270 degree. And looking at this daily chart, the midpoint from this low is today. And we're so far, I don't see any price action. I thought we were going to shoot higher, but it's just kind of dwindling in this triangular pattern. So I like to see what's going to happen here today. The weekly, you got the midpoint, and this is where I was bullish. I was thinking, all right, we're above the weekly midpoint. Maybe we got some fighting chance to go up, but that didn't play out. It just started dwindling, got stopped out. And now the midpoint has come down to 171. And there's a low here of 164. To keep an eye out. And for today, 168 is your midpoint. So for today's price action, only today, Friday, if we could stay above 168, no guarantees, that'll be good. But if we push below 168 and the bears take control, you got a target of 165, which makes sense right there. 164 and then 162, 163, and that's your 270 degree. We're going to go up. You got 173 and 174 for targets on the upside. The statistical calendar hasn't really worked out this week. Nothing that was statistically significant has shown any edge today or this week. The only thing is today is a bullish day. Let's see if that plays out, but not guaranteed. As you can see, it hasn't really worked out. The only positive thing here is I see that the new year, and it has nothing to do with natural gas, but maybe something to do with the new year starting for March. Square of 9, we're hovering around 167, which is right here. This is the 163. This is the 270 degree. So if this doesn't hold, then chances are we're going to either be around 169 to 163 or go all the way to 157 and dance around here or this whole level for next week, which is just going to be pure chop. And I'm also having my eye, if this is just pure weakness to lower, keeping an eye on 144, 142, this area right here, that could possibly be your wave 5. If the wave 5 is not already in here on the February 20th low of 152. Well, I'm going to sign out. Didn't bring you some good news, but just chop. And I'm just watching it on the sidelines just to see how this is going to resolve. In Nashville, the weather was very cold last couple of days, and then it started getting warm, and I was starting to get excited. It's like, well, maybe there might be some demand on natural gas if it starts getting really cold. But so far, that became a dud also. Nothing really happened. Now we're back to like 60 and 70 degrees now. So I'm going to sign out. Hopefully this helped you, and I'll keep you posted on my thoughts on natural gas.